Thank you very much, Burak. My name's Adam Valkin from Excel Partners in London. It's a real pleasure to be here. I took 3 flights since last night to get here from Cape Town, which is actually where I'm from. The reason I was there was to visit family, and when I went jogging a few nights ago, I took this picture to share with you from my iPhone. So for those of you that haven't been there, can see what a beautiful country it is, although you guys are very used to living in a beautiful country. But most South Africans like me are very proud to show off their country. While I was there, I discussed with my family that I was coming here to make this speech, and my wife was very concerned that I had to talk for 45 minutes or an hour, because she was convinced that I didn't know enough things to speak for that long. And while I was there, my father dug up some old pictures of me, including this one, which was me playing college tennis in the United States. And my wife banned me from incorporating it into the presentation. But she said that the only takeaways from this picture for the audience would be that I once had hair and wasn't fat. But actually, for me, there's a lot more, because tennis was my ticket out of South Africa to the United States and right into the start of the internet boom. I graduated college in '96, and the next day started working at a venture-backed startup right on my campus, which was called Firefly, and was really one of the first venture-backed social networks. The company was quickly sold to Microsoft, who did, I don't know exactly what with the technology, but it was really a great intro for me back in '96, '97 into the space that we all live in now. I then spent some time working for Barnes & Noble in the early days of the battle against Amazon, which was an amazing experience, because I think competing with Amazon is no easier now than it was then. And I actually have found myself at many times over my career in that sort of fighting Amazon zone. In 1999, I moved to Europe to work in venture capital as an associate for a company called Arts Alliance. And while I was there, invested in a number of companies, but also had the opportunity to start 2 companies. One was called Property Finder, which is now part of Zoopla, which it was a traditional property classifieds. And the second was Love Film, where I was the founding investor, but also the CEO for the first year, and a board member for about 5. And in that capacity, I worked on both sides of the sort of entrepreneur and venture equation, and learned a lot about what it's like to invest, but also to raise money. Before coming to Excel, I spent a couple of years doing something completely different as a corporate executive, as part of a LBO of the largest television production company in the world called Endemol, which makes shows like Big Brother and Deal or No Deal. And there I was responsible for the global online and licensing activities. So I thought I'd give you some background on myself, not just to give you some perspective on the areas that I've covered, but also to use up some of the 45 minutes. That seems like a very long time to me. At Excel, I've been at Excel for 2 years, or nearly 2 years, and I look after a number of companies. My focus areas are primarily on the consumer end, but broadly e-commerce, gaming, mobile and web services, and mobile, where I've been very focused recently. These are some of the companies that I'm either on the board of or have been directly involved in the investments. So I thought I would just spend a few minutes giving you an introduction to Excel, and the timing is really fantastic for us to be here and have the opportunity to talk to all of you, because we've been very focused on emerging markets, but haven't yet made any investments in Turkey. But we have spent the last year getting to understand the market and meet entrepreneurs. We've met many of you. And I can say for sure that 2012 is really the start of, I believe, some real activity in this market. But because we haven't been here, I think it is worth trying to educate you a bit about our firm so you understand what we do, what our positioning is, and how we can help your companies. So as many of you know, we are very focused on consumer, internet, and mobile. We've been fortunate enough to have backed some of the most successful companies of the recent era. You know, I can say that this has taken a tremendous effort. You know, it does not happen by luck, but by massive amounts of work to cover the market in many territories and make sure that, you know, we have the chance to see these deals and to convince entrepreneurs that we're the right partner to work with. And in many cases, we find these deals through our relationships with other entrepreneurs who recommend us. The other point from the slide is that we've, you know, done a bunch of deals, you know, big successes in the US like Facebook, Groupon, Etsy, diapers.com, some great investments from Europe too, Rovio, Kayak, which was led out of our European office, Wonga, Spotify, but also Playfish, but also in India and China, where we've managed to participate in some of the most successful companies like Flipkart in India, SoFun in China, Baidu, Tencent, and others. But despite this, the internet focus and our involvement in some of the companies that many of you know well, the history of Accel is much broader in terms of our investment focus. And you know, we have a long heritage of investing in software, networking, and infrastructure, and have been involved in some really interesting companies. Some of our most sort of current stories in that space include Atlassian, which is an Australian software company that makes Jira developer tools. Click Technologies, which is a Swedish BI software company out of Lund. I heard the tail end of the last panel where people were talking about successful software companies out of Europe. You know, well, this certainly is one. Swedish company that achieved a 3 billion market cap on NASDAQ last year. Accel invested when the company was only operating in Sweden with a few million of revenue, and today is one of the largest software companies in the world in its space. So Accel is as a firm, is almost 30 years old. We manage today between $9 and $10 billion across early stage and growth equity funds. We raised almost $3 billion just in the last year for China and the US. In Europe, we're currently managing three $500 million funds. Our current active fund, which is Accel Europe 3, is a $530 million fund and still has some way to go. The other thing about our experience is that we've worked with over 500 companies, many of which have gone public or achieved a successful trade sale. And in that process of working with so many companies, you know, creating significant value, we've learned a lot about how to manage and optimize the exit process. And we've also cultivated relationships over many years with potential buyers who know us and trust us and view our companies with a certain sort of stamp of approval, because they understand that, you know, we've done our homework and checked out the people and structured the options correctly and dealt with some of the complex international structuring issues that often distract or hinder transactions from taking place down the road. I've mentioned our global reach. We set up Accel London in 2000. Accel China was set up as a joint venture with IDG in 2005, India in 2007, and that is it for now. Most of the other emerging markets are managed out of either the London or the Palo Alto office, as I'll explain in just a minute. So our partnership is relatively small for the amount of capital we manage. We have a strong focus within the firm on domain expertise, so people are expected to get really smart about a number of spaces, not to be sort of investing all over the spectrum, and also to cultivate sector relationships that will be relevant not just for the companies, but also for our own investment decision making. And we also have a very localized investment approach where the investment teams in each office make their own decisions about investments, which allow us to make optimal decisions and to move quickly. Just a couple slides on our approach, working with Excel, what it means. We have a very entrepreneur-friendly approach. I guess that's easy to say, but the reality is if you want to work with the kind of entrepreneurs that we do, whether it's the Andrew Masons, the Mark Zuckerbergs, the Errol Damlins, you need to be nice and you need to act like a guest at their party and expect to be in the passenger seat. And I think we are very proud of our reputation and have always emphasized this approach. We don't confuse ourselves with the entrepreneur, and we really are just a collection of the entrepreneurs that we work with. In terms of our London office, which is Excel Europe, our objective, and we try very hard to bring Silicon Valley to Europe. We are an American firm with an office in Europe, with everyone based in one office, but serving the UK, Scandinavia, Germany, France, Russia, Israel, and more recently, Turkey. I think where we have been particularly helpful is working with European companies that want to go to the US. Companies like Rovio and Angry Birds, Click Technologies that I mentioned before, Wonga. But we also are very good at helping US companies that want to come to Europe. Kayak is a great example of that. We invested in that company out of our European fund and helped them in their European expansion, including co-managing some of their early acquisitions. We also, very importantly, a stage-agnostic investor. And essentially what that means is that we do seed deals, we do Series A and B, and we also do growth equity deals. And to kind of put that in context, in the last 18 months or so, we've probably done 40 seed investments in the US and Europe, and over 20 growth equity investments, even while our primary focus is Series A and B. So you can see some of these companies, like Playfish and Birchbox in the US, were examples of real seed deals where we invested in the seed round, all the way through to Atlassian and Spotify when we invested once the companies were already super successful and profitable and not relying on us for sort of development capital. But an interesting trend is just looking at some of these companies like Groupon and Rovio, is in both cases we invested very early, but they were essentially growth equity investments. And in the case of Groupon, I think we invested in the first 8 or 9 months of the company's life, but they were already doing millions of dollars of monthly revenue. And I think that's an interesting trend just that all of us have seen, is just the massive acceleration in the pace of development in companies, both in the US and the rest of the world. So I thought I would share with you just a few key trends that we observe, because although, as I said before, we invest broadly, all the way from networking and infrastructure through to consumer internet and mobile, we actually invest in a very concentrated number of areas which are essentially driven by underlying secular trends that we think have the potential to drive and support the development of multi-billion-dollar companies. So the first and obvious point is just the sort of major shift around social. And I think, many of us have been around for a long time in this space, but the first phase between 95 and 2002 or so was very much about portals, companies like AOL and Yahoo and MSN, building massive brands, massive aggregation of eyeballs, and then extorting small companies with massive fees for advertising and placement to get access to the audience. The second phase, which was ultimately driven by Google through the last decade, was about search, which was hugely favorable for startups and venture because it essentially opened up the hold that the portals had on the eyeballs and allowed much smaller companies to access customers, which fueled the growth of vertical media, e-commerce, etc. And I think the era that we're in now is very much about social and discovering stuff through your graph, and that is very real, as we know, and has driven our investment, a large part of our investment strategy with companies like Groupon that had a lot of its early success through Facebook and the sharing and advertising on Facebook, Playfish, Spotify, Branch Out, etc. So this is very real. I think for any of you operating in the space, you see it. It's also amazing just the pace of growth of social services. Even Google Plus, which people have different views on, achieved 20 million users in less than a month. And we see social as having a major impact on many industries. We discussed e-commerce. We see just the growth in advertising on social networks. The fact that Facebook accounts for as much or more YouTube traffic as Google itself. The whole new development of the social gaming industry that developed on Facebook, pioneered by Zynga and Playfish and others, and companies in Turkey like Peak Games doing amazing things in that category too. We've also been at Excel super focused on mobile. I think this is a trend that you can't ignore. Just a couple years ago, there were barely 200, 300 million smartphones, and in 2 years' time, we expect somewhere between 1.5 and 2 billion smartphones, of which probably half will be Android, which is really a relatively new phenomenon. So anyone focused on mobile, has to be very focused on Android, which was not the case even 12 months ago. And of course, there's lots of other things that we focused on: cloud computing, deep vertical search, online financial services, which has been a very important area for us. Underlying thesis that lots of opportunity exists around disrupting banks, that where services for consumers may not be as simple or transparent or as cheap as they ought to be. And companies like our portfolio, Wonga, OzForex, Braintree, Yapstone, are building very successful, valuable, fast-growing businesses taking advantage of this. The last thing to say is, from our perspective, we just see unprecedented innovation, not just from startups, but also from the incumbents. We're dealing with some of the greatest companies in the, ever imagined, with Amazon and Google and Facebook, and the pace of innovation amongst that group of companies is quite phenomenal. Our view, which we believe very strongly, is that there will be many more winners coming out of Europe. We believe, as has been evidenced in Turkey, that the serial entrepreneur phenomena is a reality. We're seeing lots of successful entrepreneurs becoming investors or angels, repeat entrepreneurs. We believe that there are real hubs developing for entrepreneurs in London, Berlin, Stockholm, Istanbul, and we believe that this will have a massive impact on the pace and the scale of the development of companies. And I think, whatever your view, it's happening in Europe, and even in Turkey. You guys have already built some of the great European companies, very valuable companies. Companies like Gidi Gidi Yor, Marcofoni, Trendyol, Yemek Sepeti, Sahibinden, Peak Games. Some have been around for a long time, some have been sold, some have, are relatively new companies that have become big in a short space of time, and there are many more. But it's a very exciting time. So the sort of last section that we really wanted to cover was just some thoughts on emerging markets and Turkey. So I don't think there's any debate that emerging markets are a massively important focus for any investor in the space. We can see here that China is already 2x the US in terms of internet users. India, Brazil, and Russia and Turkey combined are a larger opportunity than the US. And so this is very real. The Facebook data, all of you are very aware of this because I know this is an important part of the Turkey pitch, but from our perspective and for the kind of businesses that we're interested, the Spotifys, the branch outs, Facebook penetration is a key measure and a very important indicator to us about the ripeness and readiness for really cool stuff to happen. And I think that we've also demonstrated as a firm that we are very serious about emerging markets with China and India, where we had very clear theses. Given the scale of those markets in terms of population, billion-plus populations, far away, very different cultures, we chose to open up separate operations there, raise dedicated funds, hire separate teams, and that strategy has been a very good one. For Brazil, Russia, and Turkey, we plan to manage those out of our existing offices. Brazil is led out of Palo Alto. Russia and Turkey are led out of our London office. We've been very excited about Russia. In Russia, we've done 2 deals so far. Kampı VIP, which was mentioned by Ben Rooney in the previous session, is fast-growing e-commerce flash sales, but diversified e-commerce business led by Oscar Hartmann, who's a fabulous entrepreneur. We did that deal end of 2009, beginning of 2010, and then more recently invested in Ostrovok, which is a disruptive online travel service focused on the Russian market, sort of bookings.com type model. In Brazil, we've been very active, especially recently. We invested in Vastu, which is essentially like a Peak Games in kind of play in Latin America, and then a number of stuff in the e-commerce space, Shoes for You, Elo7, and more recently Kakanto, which is a sort of Yelp-like play. In China and India, as I said earlier, we've been involved in a lot of great stuff and continue to be very active there. So why Turkey? We really believe that this is an emerging market opportunity with Western infrastructure. We see strong macro factors, very strong GDP growth, really strong infrastructure, high rates of mobile penetration, strong logistics and financial infrastructure, high credit card penetration, and all the things that you know well. But I think what's really interesting is 2011 seemed to be kind of breakout year for e-commerce. And it seems that the flash sales was a big driver of kind of convincing people to go online. But it's never one thing. It's lots of factors coming together at the same time, and then maybe one kind of catalyst. But with all this said, and with all the great companies that have developed in the e-commerce space in Turkey, it has to be really early days when you look at the penetration of e-commerce sales relative to overall retail, where I believe in Turkey it's kind of minuscule percentages versus countries like the UK where it's already north of 10%. And we also believe that lots of other attractive factors around the online engagement, the young country, the high levels of education and internet sophistication and comfort with technology. So it feels, from our perspective, it feels pretty good. So without getting into too much detail, because we are we are open-minded, and you have a good sense for the categories that we have invested in, that we're interested in, the kind of themes and trends that we focus on. I think at this point our view is the stuff that we do in Turkey will probably be internet-focused and consumer-oriented. We will look to invest in companies that we think can be or are category leaders. So ambitious projects are the ones to bring to us. And we will certainly look at early stage and later stage projects. We have a very clear and demonstrated interest in later stage and growth opportunities too. So don't view anything as too late for us. We'll look at early stage stuff. I'm not sure that we'll do a lot of true seed because we haven't done anything here yet, and I'm not sure that's going to be the very best entry strategy, but we would keep an open eye, open ear on that. And then lastly, just to say that we, as I've said before, are very excited to be here. Really honored and grateful that we were given this opportunity because it seems like a perfect chance to kind of share the Accel story and introduce myself and also my colleague Luciana, who hopefully all of you have met in the last day or two before I got here. If you haven't met Luciana, she's sitting over there. Can you just put your hand up? And Luciana is the along with me and one or two other of my colleagues are very focused on Turkey, and she specifically is sourcing opportunities in Turkey, and feel free to reach out to her or me at any time. And that's it. So now we open for questions. So I welcome any of you to ask any questions, and if you don't have any, that's fine too. Go back to that. Yeah.
Looking at the portfolio of the great companies that you've invested in, one wonders if your investment size could be too big for the Turkish startups, because you said you're not interested in seed money, and I think one of the concerns is, are you going to be able to find companies that's sizable enough for you? Because other than the ones that you put up on the board in Turkey, do you see other, or do you forecast other companies that you can actually invest in? Or what's your minimum investment value?
Yeah, so good question. We invest anywhere from $200,000–$300,000 to $50 million. And we've done deals of that size, both the low end and the high end recently, so those numbers are real. Typically, for Series A investments, we'd be looking to invest between 2 and 10 million. For seed investments, 1 and below. We do, I myself have done just in the past 2 years 2 investments of 300,000, 2 investments of 1 million, 2 investments of 2 million. So I'd be very surprised if size is an issue for us in this market.
Hi, first of all, thanks for being here, and thanks for being interested in the Turkish market. We would be needing your know-how in the industry, for sure, in Turkey. My question is about clone projects in Turkey or copycat projects. Would you be mostly interested in investing these types of projects, or would you rather try to find unique business models or unique propositions that are invented by Turkish companies?
I think the answer is both. It really depends for us, because in countries like many of our European investments have been unique companies. Companies like Playfish and Gameforge and Rovio in the gaming sector that were really global leaders, did stuff before anyone else did it. So we always keep an eye out for innovation, because Accel has this focus on invention and uniqueness and all of that. But we're very open to building great companies, and great companies are often, as we've learned very much in Europe, with some of the activity in Germany and elsewhere, are companies that are built on the back of seeing a successful model. And I've done it myself with Love Film, where we used Netflix as an inspiration, and we have no problem with that. And I think in Turkey, my guess is a lot of the fastest growing businesses that we've seen have been, whether they're clones or are inspired by, for us, it's in many ways fine, because what does it mean? What does a clone mean? I'm not sure clone is the right word. I think pursuing a business that has been proven to work, both from a customer demand perspective, from a unit economics perspective, from a technology and infrastructure perspective in another market, can't be a bad thing, because it's taking away unknowns, it's taking away risks, and all of that is generally positive. But that doesn't mean that you should copy blindly. There's still opportunity to kind of figure out your own twist, as many clones have done. And you see some of the European clones becoming bigger and more successful even than the US ones. And of course, we've seen clones go the other way too. So that's a long answer to a question, which is we will look at both.
Hi again. Can you elaborate just a little bit on your due diligence efforts, your due diligence phase, especially for round A and early seed investments? Thanks.
Okay, so a good distinction, because the due diligence process for the growth equity deals and the early stage deals are different, not necessarily less rigorous, but just different. On the early stage stuff, a lot has to do with the entrepreneur and getting comfort with the entrepreneur and their previous track record and activities and references. So we make a lot of phone calls. We also have, probably our biggest advantage in the due diligence process is our global information flow from other markets like Brazil and the US and China and India. So our access to information and knowledge about what's working and not working and the right people to talk to get the right answers is pretty good, and allows us to kind of cut to the key issues fast in the diligence process. So, it's very much phone call based, and typically if you work with us, you will notice that a lot of phone calls are being made to people around you and to other companies that are relevant. But I think we try to do it in a relatively painless way for entrepreneurs. We have a lot of experience with it. We have a sophisticated approach for doing it, and the seed stuff is probably a lot lighter than even the Series A, Series B due diligence, because many times the investment decision would be based on a view of the entrepreneur and the size of the opportunity, knowing that kind of everything else is pretty much unknown.
Can you give a time period, typical time period, until a decision is made? Is there like an average?
Well, it depends. Look, it depends whether meeting the company is the first we ever hear about the company, or whether we've known about the company for a long time before we meet them. So it really does vary. But there have been instances where we've made a decision to issue a term sheet in a day. And that does happen. It's not a once-off thing. So meet a company and say, let's do this. Especially if it's seed. If it's seed, we have the capacity to do a deal on the spot because we only need 2 of our partners to meet it. But if it's a Series A deal, which is going to be like a normal investment, it could be a few weeks. It's unlikely to be a few days, but it could be a few weeks. But oftentimes it's a much longer process because we typically get to know entrepreneurs over a long period of time, and we often meet entrepreneurs long before they're interested in raising money or just after they've raised money. So it varies a lot. But the main point is we try and take the pain out of the process to the extent that we can. So one more point on that is, in many instances, we view the first meeting not as the beginning of an investment process, but as the first meeting of getting to know someone. So we may be interested, but not in any rush to do a deal right then. It doesn't mean we're not interested or we're slow. It may just mean that we, want to watch. And it may take a transaction to catalyze, to push us to move faster. But that's not about process. That's just about whether we are ready to take the plunge at that time or not.
Hi, this is Serhat Görgün from Galata Business Angels. My question is, what are the value adds of Axel for local startups, Turkish local startups, for globalization and internationalization?
What are the value adds?
Value adds, yeah.
So, are we talking about companies that are going to live in Turkey only, or companies that are going to go international?
Both.
Both. So I think a lot of the value add is the same as you'd get from any firm, which is lots of experience from the partners with many companies over decades, access to contact base for hiring and partnerships, business development, thinking about future fundraising, access to our network of other investors, value-added partners, co-investors. We often bring angel investors into our deals to provide more expertise to the entrepreneurs, help with exit management, thinking about timing of an exit, planning an exit, working with advisors, thinking about market opportunities, dealing with adverse situations, figuring out how to pivot if things aren't going according to plan. So I think there are lots of different ways that we help, but most of it is not. We're not focused on helping the entrepreneurs run the business. We're focused on helping them navigate, and our role is not. Is not to run the business. We're not heavily focused on switching management. We generally like to back the entrepreneurs that we back and stick with them. And if it doesn't work out, then it doesn't work out. But I think a lot of it is just also having access to our platform and being able to call on our entrepreneurs to come to the events that we organize, to come to our CEO days, and just kind of plug into what is a global machine.
Hi, Adam. Elbrus with BTS. Quick question. There are a lot of new funds being established in Turkey, a lot of first-time teams. What are your quick advices to them? What they should look for in setting up a new fund, new strategies? Should they just get into the game just to invest in the companies? Should they think long-term? What are your thoughts about this? Thanks.
Yeah, I think that's a great question. And, I actually worked for a first-time fund for many years and went through ups and downs and learned a lot about that. And I've also been involved in a number of sort of business angel type initiatives in the UK. So I would say for first-time funds, I think it's a great thing that there are more funds coming into the market, especially if it involves successful entrepreneurs or smart business people that can add value to entrepreneurs, because a lot of entrepreneurs doing really interesting stuff are pretty young and may not have had some of the experience and exposure that they need to successfully build a business. So for the benefits of the new capital, but also the expertise that typically come with first-time funds, I think is a great thing. Remember, it's not easy to raise a fund, so anyone who can raise a fund is probably, to some extent, credible. And we're very open to working with those kind of funds. I think there are lots of challenges as well, because a lot of the success of a fund is not just about the investments, it's also about how you function and organize yourself and the kind of disciplines you develop about what kind of deals what the profile of the deal should be in the various stages and the exposure and the diversification. So I think one of the conclusions I drew after working at Excel for 3 months, having previously worked at a first smaller fund many years back, is that the best thing you could do is try to pick the brains of very seasoned fund managers to try and avoid some of the common mistakes that would be made by any kind of new business entrepreneur. And I think the one very common mistake is investing too much money too quickly in a very concentrated time on a very concentrated sector of the economy or of the online space. Because if the tide goes out, your whole thing can just blow up overnight. And I saw so many funds blow out in 2000 and 2001, and then again in 2008 for those kind of reasons. And it's also important to remember with funds is that many funds that still exist have actually blown out already because they don't have any capital, have no prospects of raising capital, but they still exist because they have fees. And it's not an easy business to be successful in at all. So I think it's a great thing that it's happening, but proceed with caution, look after the capital well, and make sure to have a very well-paced and thoughtful investment strategy.
I've got a follow-up question to that. When you look at making an investment, you have a lot of risk factors, market risk, technologies, etc. But in Turkey, most of the times you're faced with a team or execution risk. How would you mitigate? I mean, if you were a first-time fund in Turkey, how would you mitigate this risk? Would you create a program to train the entrepreneurs or monitor them closely? What worked at Accel in new markets, in new investments?
Is your question about what can you do to decrease execution risk?
Yes, but based on a team, not on technology or on a market. But how would you, invest your energy and time to make the entrepreneur successful in execution, carrying out the plan, reaching the milestones? Is there a systematic approach at Accel that worked for you in different markets?
Yeah. So the truth is that most of the entrepreneurs we back are, for whatever reason, self-sufficient, which doesn't mean that we don't take lots of steps to help them, but we are not typically setting up some kind of incubation environment for the companies that we invest in. I think that has worked very well in a lot of markets. I mean, the success that Techstars and Y Combinator have had in the US, where, frankly, I think they've done a fantastic job, is something that I think should be emulated, where you identify people that have tremendous technical design talent and sort of commercial acumen, but sort of help them in a concentrated period of time figure out some of the stuff that would take them longer than it needs to take to figure out. So I think that's one way. Another way is just to help them as much as possible with hiring and having access to talent and having access to advisors and board members, because there's nothing more helpful to an entrepreneur than a successful entrepreneur who's done it before that can, especially when it comes to decision making, because it's the hardest thing about being an entrepreneur is you've got to make all these decisions that you've never had to make before alone, and they're decisions that will have huge implications that you have to make in a short space of time. So surrounding them with people that can help them kind of hone their thinking and come to the right decision, not make the decision for them, I think is very valuable. And then, of course, exposing them, making sure they're plugged into the scene. And that's the reason why Silicon Valley works, and London and Shoreditch is working, and Stockholm and Berlin, is that there are so many entrepreneurs around. And they all kind of find each other and spend time together, and not only benefit from each other's wisdom, but also by doing deals together and finding ways to partner. So I think having high concentration of companies in the same space is another thing that works pretty well.
Hi, this is Gökhan Güner from Inventram. My question is, Accel is actually investing in many areas other than also e-commerce. Will you be also looking other sectors in Turkey opportunistically? Thank you.
Yes. So, we're very interested in e-commerce, but also lots of other categories. So, we open for investments. And e-commerce, I mean very broadly. But we open for investments in all kinds of web services, potentially mobile down the road, gaming. But again, we focused on category leaders and companies that we believe can be large enough to make an impact for us. what kind of areas of business are you thinking?
Actually, as in Ventram, we invest in any sector that has technology or innovation in it, and we have many projects that we're developing there in the early stage, but in a year or so we will be there, for example, in biotech and electronics, hardware, and plus software, for example.
Yeah. So for us, very unlikely, and we don't do biotech at Excel. We used to. Hardware, very unlikely, but certainly software, any kind of innovative technology. I mean, that's what we do a lot in Israel. You know, we've done over 20 investments in Israel. Some of them have been consumer internet, focused on the US market, because the market there is like insignificant. But most of it has been software and infrastructure. But it's a real center for innovation there. So to the extent that there's really innovative stuff here, we'd be interested.
Hi, Sıdıka Vaysal from B+B Law Office. I would like to ask you a personal question. How do you feel as a South African that a South African company, Naspers, have made one of the biggest investments in e-commerce in Turkey to Markofoni?
Well, so as a South African, I have followed Naspers' progress and development with great admiration, because you know it's quite fascinating and almost unbelievable that a South African media company has been as successful as they have been in the international market, specifically emerging markets. And if you look at their success in China and Russia and Poland and Brazil and their early stuff in Turkey, it's very impressive. I think Naspers has really proven to be one of the great internet investors.
So that was the last question, I think. Is there a question?
We have one more question. Yeah.
Hey Adam, it's Brock from Ale.com. You told us about that when you play with the big players like Facebook, you need to follow their way. What about relatively smaller companies, I mean like startups and early stage companies? What is your involvement in the decision making? What is your involvement degree on the decision making and management level?
Yeah, so I mean, we actively involved in all companies, no exceptions. So it's not so much a question of we do whatever the company wants. The point is more that we have a entrepreneur-friendly approach that is supportive and respectful to the entrepreneur, which may often involve lots of heated debates and arguments, and occasionally the relationship doesn't always work out. But I think that our approach of dealing with firms, dealing with companies, is the same. And when we invested in some of the companies, and the one you mentioned, they had 6 people in the company, so it was a very small company with no revenues. But the point is more that this is a business that's all about reputation and relationships. So it doesn't mean it's always easy and trouble-free, but we try and keep it positive and have a symbiotic relationship that works. Thank you. Thank you very much.